Hi, everybody. Thank you for joining today. This is Bryan Falchuk. I was head of claims at Hiscox USA, and I guess I'm put in as an insurance thought leader, so hopefully I live up to that. I want to thank you all for taking the time to join today and hear some thoughts from Eric Spencer, Chief Claims Officer at Ameriprise, and Amrish Singh, Head of Product at Metromile in their enterprise unit, to talk about results-driven claims innovation, how we can unlock the real value of claims technology. To give you some background on Eric and Amrish, Eric is the Chief Claims Officer for Ameriprise in their auto and home insurance, and they are now an American family company. He has 30 plus years of claims experience as a transformational leader, driving efficiency and effectiveness through structural design and technology integration. And he's held prior senior leadership roles at Amerishore Mutual Insurance, QBE, and various claims positions at other respected national carriers. Amrish Singh is a VP of product at Metromile Enterprise. Metromile is the leading pay-per-mile car insurance company in the US. Metromile Enterprise is the company's enterprise software group, which enables insurance carriers to improve customer experience, reduce costs, and drive operational efficiency using Metromile's innovative AI-based fraud and automation platform. Amrish has worked in the enterprise software industry for over a decade and is an expert in using software and machine learning to optimize business processes in insurance. And I want to just give some opening thoughts, kind of setting the stage. Insurance Nexus, Reuters Events putting this event together, this webinar together, they shared a really interesting point that 77% of insurance carriers are increasing their investments in innovative tech to achieve seamless claims. That's great. The trick that I wanted to raise is it doesn't always feel like 3/4 of us are really pushing ahead. I think a lot of us end up feeling stuck. And the situation we're facing, we've got two outside pressures. One is on the disruption side, where we have full stack insurtech carriers, whether they're full carriers or MGAs, really pushing on the customer experience side. And we also have customers who, in every aspect of their lives, are now used to dealing differently with companies they work with, digitally, more flexibly, and they're demanding that of us and expecting us to do things quickly. And that's not always easy because, of course, we have a lot of headwinds. We have regulation, bureaucracy, the feeling that we're too far behind. It's this notion of turning the aircraft carrier, which is not an easy thing to do. And for several of us, we've been perhaps burned by past technology experiences. And when you hear the terms innovation or technology, you immediately think, tens or hundreds of millions of dollars, 5 to 8 years, cost overruns, schedule overruns, scope that never seems to deliver on what you expected. And so, with this webinar, thinking about results-driven claims innovation, the results of some of these past efforts have left much to be desired. And that's not really a great kind of, starting point for us. And yet, there are ways for us to do this. There are ways for us to push ahead. And that's where that, 77% of insurance carriers increasing their investments in innovative tech and to achieve that seamless claims experience, it is possible. And that's one of the exciting things that I think we're going to get into today. It's that we do have the ability with a new generation of tools, new things at our disposal to actually be able to move the needle, try things out, test, expand, and actually really innovate in some exciting ways. So I'm excited to hear what Eric has to share and Amrish after that, and then we'd love to get your thoughts and your questions and make this interactive in the second half. So I'm going to turn it over to Eric. So thank you, Eric Spencer from Ameriprise.
Thank you, Bryan. Hopefully everybody can hear me okay. When you mentioned the statistics on the 70% plus of investment, it made me think back when, as a kid, I grew up in Southern California, and my dad was a contractor and put in a number of the freeways down there. And at the time, back in the 70s, that was just unbelievably expansive. It was the leading part of the nation to show how freeways could be built all over. They were out in the middle of nowhere, big lanes, and now when you visit California, you get to experience traffic. You can see, 12-lane freeways across. And it went from innovation and the massiveness of new design to an infrastructure that is deteriorating, that requires much maintenance. And I think is the 70% today what we're doing, investing in solving for the future, or is it trying to catch up to our past? And so when I think about what we need to do when we look at technology for a solution in the industry, how do we spend that money? It's important that we understand what is the customer, or what is the customer's needs, what is it that they're asking for, and what is the customer going to be? Because if we design where we're only thinking a few years out, then we're basically building patchwork, and we don't want to spend our resources and time doing that. Then as we think through the desired outcomes, what's the desired outcome of what we're trying to do as a company? Are we, again, just bolting on the shiny new products, or are we trying to create something that's going to differentiate us in the marketplace? Once you understand what your differentiator is, then the value adds that you can connect to that, they become, a decision. Are you going to be an adapter, or are you going to be a true innovator? Are you going to lead the pack? Or are you going to be a close follower? Are you going to create a touch environment where you differentiate from others who are a non-touch, and they're more through the efficiency? And then when we get that, and then there's the decision on understanding, are we going to build the map for the future? And I think about, I've never worked in a startup. I've always been in traditional insurance over my career. And I think, boy, how fun would it be to be in a startup where you are solving problems and you're building from scratch. And what I've changed over the last 20 years of my career, I wouldn't have started in those places, right? It's always a change mechanism. So are you building to the future a strong foundation that is basically from scratch, or do you have a strong enough foundation, or do you need to repair that foundation so that you can build to your desired needs and future state? So it really leads me to the question, when I think through, is technology and the things that we're adding into the technology space, does design, our workflow processes, does design lead technology, or does technology now lead design? And I think you can choose either or. Some have an opportunity to make that easier than those of that are still on, frankly, legacy claim systems. Once you're in there, I think the challenge is just understanding exactly what those needs analysis are, what's core, what's non-core, what are the things that you have to do, or can you find solutions that are completely different and create new opportunities? And then making sure that you're disciplined in that map, that you're not chasing something that isn't going to be a differentiator, that may look good for 2 years, but it's going to be outdated in a year from now. And I think through what some of the stuff that's going through that we're excited about as we look to the future is, how do we get from the accident scene partnering with manufacturers to the full repair estimate within hours versus days? The notification that comes from that scene, the moving of that vehicle, the repair estimate, all of those things before the consumer needs to even be concerned about anything other than their own well-being. I think that's close to where we're at in the future. Likening on the property side, as more homes have triggers and sensors that allow us to monitor electricity or monitor water, can we create that same design that creates the alert that comes from the sensor that notifies the FNOL at their insurance carrier to trigger the phone call to the insurer to say, look, we've already seen this, and what's happening, and sending out the estimate or creating the repair estimate on the phone with the insured. And likewise on the comp side, the ability to have wearables to know, and using data to drive changes in somebody's motion or exertion in energy can result in injuries for this type of employee, and be able to create a pre-check or a pre-call to the employee to see if there is a concern of a comp claim, or directionally get that to a nurse to provide treatment to prevent some of the delays in return to work. So as I look at the future, I think, what is it that's going to be really the needs of the industry, not in the near term, but what are the needs of our customers in the next 10 or 12 years? And then where do we fit ourselves into that? What pieces or what parts do we want to add that create a differentiation for us? I think it's a very exciting time for us, and I think it's a great opportunity to either allow design to be enabled by technology if you're already built, or I think it's a really exciting time to let technology lead design. And with that, Bryan, I'll turn it back to you.
No, that's fantastic. Thanks, Eric. And I think being in the Northeast right now, your point about the roadways hit home a little too closely. I think it's all patchwork, unfortunately. But that's such a great analogy, because we do find ourselves doing this where we're sort of forced to solve for that catch up that we need to do. And I think a piece maybe is driven by the regulatory side, where that makes us have to be a bit reactionary, right? We do have to invest to respond to regulatory change, and that always has to happen. So there's a priority call there. And then does that keep our framing from being more forward thinking? I love that you put the horizon out there 10 to 12 years. That's probably a lot further out than many of us tend to think. And those regulatory changes bring us right back to the present day. So a great wake up call, I think, as an industry to keep our eyes focused ahead, even when we do have to come back to the here and now to respond to some of these immediate demands, the hole in the road, so to speak. Fantastic. Amrish, I know you've got some slides as well, and we're going to pass that over to you. I'm excited to hear from your take on it, being on the enterprise side and some of the tech solutions. So we'll kick this over to Amrish.
Thanks, Bryan, and hello everyone. Excited to be here. Yeah, I think from my side, I'd love to share our experiences in both being a full stack startup insurance company, and then also selling our technology to other larger insurance carriers. We think of ourselves as a technology company that just happens to sell car insurance. And as a result, we've kept a very close eye on a large number of innovations that are coming up in claims management. And honestly, there's more innovation now than ever before. The way we've tried to prioritize this is we've broken down our investment in these technologies in 3 key buckets. Those pieces of technology that are helping us improve customer experience, those that are helping reduce our loss costs, or 3, technology that helps us empower our claims team to do a better job. And what we've seen more recently is that the last 2 buckets are going very hand in hand, are going very close together. The more investments we make in empowering our claims team with technology, the more reduction we see in our loss costs. And one of the big challenges that we've seen is, how do we prioritize? How do we ensure that we are putting the right investment in the right areas? And on the customer experience angle, we really think of this as a 2x2. On one axis, there is the amount of interaction or human touch that customers expect from us. Certain customers expect a high degree of human interaction. Others are expecting a fully digital experience. And what we've tried to do is try to understand where our customers lie in that spectrum. On the other hand, just the way claims activities are performed, some are very simplistic in nature, such as booking appointments or booking a rental car. Others are a lot more complex, like things that are associated with health or with bodily injury. And as a result, we've looked at the bets we can make in technology, and we focus ourselves in those areas where customers are already expecting a highly digital and interactive experience, and those activities where we believe technology can do a lot better job than humans can. What that really has allowed us to do is move our claims expertise and our experts into those areas that are a lot more complex, where a large amount of human interaction is needed. And very importantly, we've also made significant investments on retraining people and investing in improving our processes in order to make those aspects of claims management a lot better. And I think this is the key advantage of technology that often goes missed, which is essentially, as you're investing in and taking the load away from your claims teams on the simplistic activities, you're making them more available to focus on the much more complex set of activities. And we've taken this sort of idea to heart and organized our claims management and our claims processes to work in this sort of 2x2 spectrum. The flip side, internally inside our company, we're investing in technology that's helping our claims team have the kinds of tools that helps us reduce loss costs. Now, when you think about the past, whenever claims organizations thought about investing in technology, there was only one thing possible, which was to upgrade their core claim system. And obviously, we recognize that the act of upgrading this every couple of years was a very expensive activity with a high degree of effort, but also obviously had a high amount of impact as well. The way we thought about this is, especially as we're looking out far into the future, as Eric was talking about as well, we wanted to see where our technology bets were working well for us and where there were areas where we could potentially have to make changes. And so we focused a lot on those technology investments which had a high degree of impact, but where the cost of ownership and the cost of investing in a first experiment or a first test in those technologies wasn't incredibly high. And so as we look at every new piece of innovation that comes out, we're constantly organizing these pieces in this 2x2 spectrum and investing in only in those places where we're able to see a return much earlier than, for example, what a large-scale claims transformation by upgrading the core claim system would lead to. More tactically speaking, the way we've done this at Metromile is we looked at the entire claims process from the point where, just before an accident or an incident happens to where FNOLs are filed to where a claim is eventually paid out. And we've broken our investments down at Metromile in 3 specific areas: 1 in FNOL, 2 in fraud, and 3 in automating the claims experience. Metromile was one of the first companies to come up with same-day payments, which is the idea that for very simple claims, we're able to pay out a claim within 24 to 48 hours based on us ensuring that certain aspects of the claim are easily captured. And that innovation for us was possible by making investments in these 3 areas. The way we thought about FNOL is we wanted a fully digital FNOL experience. This is one of those things that fell into the, for the simple claims, customers are already expecting a very digital interaction and a digital experience. What that allowed us to do is to capture rich structured data coming into a claim at the very start of the claim. We were able to also triage customer needs much earlier. So in our case, as soon as the claim is filed, we're able to kickstart a large number of activities, both in terms of interacting with the customer, but also downstream in the claims organizations the second after a digital FNOL is filed. And what we've seen over time, especially as we've looked at our customer surveys after claims are finished, is they often point back to the point of FNOL when they were able to provide a large amount of information, but also got to know really early on what they had to do in order to get the claim successfully processed by us. The second area of investment for us, which again falls under that high impact but low to medium effort category, is we've invested heavily in AI for fraud detection. by taking in information from FNOL in a rich structured manner, and by running that through automated fraud detection techniques, we're able to find a higher degree of fraud with a higher degree of accuracy than we were able to find with human experts. What this has also allowed us to do is segment the initial ethanol experience between those that are bad actors versus good actors. We're able to reduce more friction for bad actors because we're able to catch that much early on. And for the good actors, we're able to find cases that are genuine and authentic much earlier and put that into straight-through processing. Again, enabling us to create experiences like the idea of same-day payments. And that really led us to our third major investment bucket, which is automating several activities that fall under that simple expecting digital experience quadrant in the 2x2. The idea here is we're looking at automating all simple claims management activities. An example I gave earlier was booking appointments, issuing payments, booking rental and repair shops, and also in the cases where much more complex activities are involved, finding areas where within those complex activities, certain pieces can be automated away. The really big advantage this has created for us is we're able to offer 24/7 access to services for our customers at their time. And that's really created a big differentiator in terms of customer experience for our customers. Eric was talking about where companies should think about their long-term sustainable competitive advantage. On our side, we really believe that this technology investment is creating a long-term cost advantage for us. As we look at the industry and as we look at where investments are going into loss leakage and claims processing, we believe that by making these investments and using this prioritization matrix, we will be able to create a long-term competitive advantage on the loss reduction and the claims cost side over the longer period of time. And that's a really big bet with technology. So I'm going to pause here and happy to answer questions throughout the course of the webinar. Thank you.
That's great. Thank you for that. I think, being able to just take these decision points and map them out on a simple 2x2 actually is really empowering, because it can very quickly give you some things you can start to make progress on. And, you guys have shown not just for super simple things, but actually taking it down the path of having real impact on the customer experience, on the carrier's bottom line, yourself or those carriers who are using your tools, and the employees. I love that sort of three-sided coin to it. It's not just about profitability and the customer. There's also these employees here, and especially in that job market that we all face right now, employee engagement is really important. So I love that that was front and center for Metromile as well. Well, fantastic, both of you. Thank you for the slides, for the thoughts and the commentary on your experiences, and as you think about how we can start to unlock the value of claims tech. I'd love to open it up to questions and hear from the audience with things that you have for our two panelists today, both Eric and Amrish. I might kick one off if that's okay. I don't know if that's cheating, but I was very curious. Amrish, it's an interesting position to be for Metromile to be both, one of the disruptors that I mentioned before, and also at the same time serving insurance carriers. So I'm curious if this ever comes up where, you're sort of caught on both sides of it, and recognizing that, as you work to help your customers on the carrier side, you may also be creating ideas that you can put out on the enterprise side. And is there ever an internal struggle or battle around this sort of competing with yourself type situation you might find yourselves in?
So the way that's come up often is we're often looked to as or rather we see our role as educators in the market. Often people are coming to us asking for advice and knowledge on how to solve certain problems. And we've never played the role of guarding those ideas or innovations, because at the end of the day, what we really want to see is the entire industry level up their capabilities. So that comes up often, the fact that we're both an insurance company and also a technology provider. But more often than not, it's a lot more about understanding how we've achieved tangible benefits using our technology within our own insurance business. And I think that helps us tell a better story by able to explain real life tactical examples of where a digital ethanol experience is leading to better customer experiences, or how automation is leading to lower cycle times and more retention. We've really come across situations where it's more of a where there's any consternation associated with that.
No, that's great. And I think there's enough room for improvement all around that we can all benefit each other. I want to ask a question of both of you. I'll start with Eric. How are claims leaders proving a return on investment when it comes to integrating new technologies? And I think in claims specifically, depending on your lines, the tail may mean it takes a while for us to see the benefit. So I'm curious, from your experience, how are we able to prove that ROI?
Yeah, I think it's similar for the way it was described. We look at all three parts of the loss cost triangle. So we're looking at the impact on ULAE, ALAE, and loss on any initiative that we undertake. And I agreed. If you're looking at claims that have tail, construction defect, comp, something that is going to run longer, it takes a little while. So you're always trying to find what those leading indicators are and measuring the results of the leading indicators. So it could be utilization. That would be an early measure of a future outcome where we may not see the results through the triangles for longer periods of time. And then, for us on shorter tail stuff, when we see things on short tails, the data is so rich, and you can do the analysis so quick now on paids and see the shifts in triangles, or see the shifts in pendings and the paid rates, the case reserve rates. All of those things are pretty clear, where you can get a quick view as an indicator whether or not you're seeing the effect of that. On the efficiency side, it's pretty easy, right? Is it more efficient? Can we do more work with the same amount of people or higher valued work, or do we do more? We're just able to do it with less people. So that is usually the easy one to measure.
Yeah. Well, and I'm curious if you've seen a push towards being able to experiment more. Amrish made the point about it's not about the core system as much anymore. It's not, that's not the only way that we innovate. So that frees us up potentially to do things in pockets or in pieces where we can test and learn. Are you finding that that's becoming more common, or is that not really playing out yet?
No, I think actually it is playing out, and especially for an old guy like me, it's exciting to think companies are investing in the willing. Look, we work in a risk business, so you have to be willing to take risk, but we're also risk averse. And yet I think there is a growing momentum of what I've seen in a number of carriers that I'm familiar with, where the innovation side of the house related to claims especially is starting to have independent funding, the willingness to fail, the willingness to be completely creative and leverage things that we never would have thought were of value in the claim space, may be able to connect back where we can be preemptive or early work on understanding your policy book in a certain area, early work in flyovers and understanding the depth and the characteristics of your the homes that you have in that, the businesses you have in that, and the effect of being able to pull that back later when you have weather data. All of those things are now being pursued at a number of places without any attachment to a true ROI, because we're waiting to see what their potential is. So it's a fun era to be in, and I think we're seeing more carriers willing to put money aside, knowing that the long play is a return on the lost dollars, and maybe it's a differentiator or maybe it's just a service play, but the long-term play is an investment that comes 3-5 years that will play out for 10 or 5 years.
Okay.
And just to add to what Eric was saying, one of the things that we've seen is more and more carriers looking to run POCs for different concepts. With any technology investment, it's a factor of time to test and the cost it would take to test. And as newer technologies have emerged, especially with more and more tools being SaaS tools, where the cost of ownership is significantly lower, and infrastructure technology is becoming highly commoditized, like Amazon Web Services, the cost of testing out a new technology, like doing fraud detection or testing out a new customer experience platform, is fundamentally lower than what it was even 2 years ago. And I think this is what's enabling claims innovations departments to run many number of tests in parallel at a much lower price point per test, which allows them to see benefits much earlier and much easier as well.
Yeah, no, I appreciate that, Amrish. I was going to ask you specifically, since you're on the side of building some of these solutions, are you building in measurability from the start? Like, is that something we can actually design into the solution so we get some of the real-time metrics? Eric was saying there are certain places where it's going to be a lot easier to test right off the bat whether it's working. Is that part of the solution building as well, that you build in the measurement tools right from the start?
Very much so. One of the advantages or the strong learnings we had as we build this technology to serve our own business is that we were essentially dog fooding a lot of this technology before we ever went out and sold it. And so we had to come up with really simple metrics that the organization could buy into and also create transparency in our technology investments. And so, related to your previous question, as we thought about these technologies, we started focusing on 3 specific metrics that were fairly easy to track, but gave us a really strong indication of the eventual impact on our loss costs. So the first big metric for us was number of claims we're able to process per handler per year. On an aggregate basis, how are we improving in our efficiency, which is measured by the number of claims that every handler is able to process. The idea being that if there's technology available, if these handlers are using this technology to make their job better, we should see an uptick in the average number of claims being handled. The other big metric for us was what we call a customer experience score, which is a compounded metric of a net promoter score and a couple of other different factors. And we track that very honestly, and we audit that every quarter, and we build that metric into the platform that we sell out as well. So there's a dashboard which can demonstrate that metric and how that moves. And the third metric, which was a surprise internally of how important it was, but is not a surprise as we go out and we speak with claims organizations, is the employee satisfaction score. The idea that really, you're making these technology investments at the end of the day to make your employees happy, also that they're dealing with more modern technologies and they're more equipped and better equipped in doing their job. So for us, these 3 metrics really matter, and the advantage that these 3 metrics have is that they're easy to measure, but have a strong correlation with a longer term downstream metric, which is obviously loss reduction and operations efficiency.
That's really helpful. I want to take some of the questions from the audience. So the first is from Scott Brown. Does the panel have thoughts about how they feel automation and AI will help claims professionals perform better, and is that a focus? So Eric, maybe starting with you on the AI side, is that, there's a lot of talk. It's very buzzworthy. It's a great hashtag to post with if you're putting something out on LinkedIn, for example. But is that really where the focus is today? I know Amrish had that the spectrum between human touch versus more digital. is this a key thing that you're talking about in your business?
Yeah, I think it has been for time, but we're getting better at using what information is there to drive decisioning and what really needs to be touched. So as we learn from the data that's coming in, we create new workflows or we create new strategies to solve problems. And again, I think to Amrish's point, the ability to focus on the right level of work and have the data driving that to, or driving the right level of work to the right individual at the right time becomes a enhancement to the experience for the employee, but certainly the enhancement to the consumer, where they're not going through process that they don't need to go through. So it's being used as we leverage models and tools already today. But I anticipate that it will drive decisioning, or the lack of decisioning necessary in the claims workflow more and more as we go further in as it gets more and more mature in our own data and in our own industry.
That's really helpful. Yeah, Amrish, you have something to say on this as well?
Yeah, I mean, from the way I see it, there's two aspects to this. I think AI and automation is allowing insurance companies to offer access to services at any time that the customer wants it. The big thing for same-day payments, which was a major investment for us and saw a major benefit, was only enabled because we were able to use AI and machine learning specifically in order to detect fraud and as a result, put things into straight-through processing. And the other aspect here is that our employees are getting empowered using these technologies to offer a better customer experience as well. So definitely there's a strong correlation between investment in these two areas and customer experience.
Thank you. I want to raise a question that Andy Hill posed to both of you that I think is a really important one for our industry in particular, because we don't just do this work ourselves. We work with a lot of third-party providers to get those claims resolved, whether that's independent adjusters or body shops or anybody else. And so the question was specific for Ameriprise and Metromile, requiring non-staff or independent adjusters, these outside third parties, to utilize what technology that you're innovating with would you require them to utilize, and how are your individual companies integrating the independent adjusters' resources into your automation plans?
I can start with that. So we use a large number of external parties, both at Metromile, but also many of our clients. And the way we've thought about this is we focus on building an open platform that can get integrated with these systems that other parties are using open standards. So I wouldn't have a specific example of how this is working out, but obviously we've experienced and we've experimented with integrating with other partners, and often that ends up happening using open standards. We're seeing in the industry itself, many of the vendors that are coming out, many of these third parties are looking to integrate using what we call web services to integrate with each other's technologies, because there's not any one vendor anymore or any one technology platform that can offer all kinds of services that a claims organization will need.
That's great.
The only thing I would add to that, Bryan, I think the reality is if a small player can't adapt to providing solutions that are equivalent to what the larger vendors are doing, they're going to get left behind. As more and more carriers, ourselves included, as we move to look to how do we leverage technology to be an enabler and at some point leverage technology to be the driver of decisioning and work, those that can't partner, and again, and to Amrish's point, those that can't connect easily into our systems are going to self-select out. And so the reliance, the expectation on vendors to be able to do some of the core concepts, when you look at the auto physical damage world, the core concepts of being able to do a lot of the things that we talk about today without having the carrier have to build those models or build that technology. The small players will either have to find partnerships or find a unique space where they can exist in that area, because there's the technology in that space is really the manufacturers are going down that path. The big players are going down that path where they're using all the machine learning. They're doing AI as a part of their solutioning. They're creating pass-through claim handling on statistical models and so forth. So if the independent is going to lose their position if they aren't offering something that mirrors that, even if it's in a scale that's relatable to them, but they're going to have to do something, or I think they're going to get left behind.
Yeah, that's a really key point, and I mean that's one of the complexities. A whole other panel, I suppose, for the third-party providers, especially some of the smaller ones, is how do you have the integration points and the connection points for so many different carriers that you're trying to serve? Because oftentimes they will all have different ways that they want to do things. It's part of the headwinds that I was referencing in the beginning is we have a multi-pronged service delivery solution in this industry, and so that complicates things a bit. But I think you raise a great point. If those partners, those providers are not able to integrate back as carriers try to move forward, those providers are going to get left behind, no question. Another question that came was this was just in the news this week, actually, for those who follow various InsurTech news, with discussions regarding bias in algorithms becoming more prevalent, do you foresee an issue with regulators investigating how algorithms are used in claims handling? Amrish, I might point that one at you to start, because I think that's probably critical for Metromile, right?
Yes, absolutely. So, for as long as the science of machine learning, which was the precursor to artificial intelligence, has existed, the fear of bias has existed, and we've seen this across the industry, right? Not just in insurance, not just in claims, but in every aspect of our lives as algorithms are being involved. So just to explain, the reason why biases get involved is because machines need human beings to tell them how to think. And so if these human beings have implicit bias, that bias has a fear of landing in the algorithm itself. So we take this problem really seriously. We employ techniques like multi-rater labeling, which ensures that multiple individuals are involved in the act of giving a feedback in order to ensure that such biases are not incorporated in the technology. So as the science has evolved, as this problem has become known, corresponding solutions are also available in the science in order to ensure this does not exist. So if you ask any data scientist, they are very fearful of the idea of bias coming into their models that they think should be extremely pure as well. So efforts are put in it. I can't speak much to how regulators would get involved in this, but what I can assure is that I think this technology and the science recognizes that aspect, and there are measures in place to prevent that from happening.
Thank you. I mean, that's front and center for you. It was particularly this week, it was another pay-per-mile OBD 2-port monitoring carrier who sparked that question, because that was pretty front and center in the space this week. Eric, how about yourself? Is that something that you guys have thought about or talked about at all as you start to look at different ways to bring these new solutions in?
And I think you referenced it. We live in an environment that has regulation, and that's not going away. I think the key with any of the things that we either leverage externally or build internally is the ability to be transparent. So I think that in any time that we're transparent and we're forthright, it takes away some of the questions. But my experience with regulators over the 3 decades I've been doing this is you need to be able to show them and be able to demonstrate that. So we're not giving away trade secrets, but we are able to demonstrate, then we'll be in good standing with them. But I would fully expect that they will ask those questions, as they should, because There's a need to protect the consumer in the business, and the insurance industry as a whole generally steps up to the plate on all of those opportunities. So I would expect that to be a pressure going forward. And I think the more transparent we are, the easier we'll have with those questions.
Thank you. This next one's also for you, Eric, specifically, because it's to a point you made earlier, so don't rest your voice too much. You had mentioned connected home and workers' comp, exploring solutions in those two lines specifically. I know you're thinking more broadly than that, but that sparked a question from this person around where you're starting in the customer journey and what customer or what consumer partners you see value in partnering with. I don't know if this is meant to be broader or about those two specific pieces that the person asked about connected home and workers' comp. So if you want to speak to that, are there specific brands and where in the journey do you see making those connections most valuable?
So we're early in the journey, or my experience is early in the journey. So, specific brands, I won't give that. But I think the sooner we can get at the entry point, the better the event. So if we can create the sensors that happen to preclude the loss or mitigate the loss at the earliest point, that's where we want to see if we can't start. So you think about in a comp space and construction, if you can create the right environment that has sensors to stop work or shut down work or protect a worker from getting injured, or the wearables that begin to give warning signs of limitations or hitting limit points. Those are all things that are intended to become service provider components that will mitigate the claims experience. And I think the same applies when you look at the property space, when you start anticipating what the smart homes and the smart businesses can do today to anticipate change in pressure or change in certain indicators that can shut down systems or begin to mitigate the loss once it does happen. So my experience where we're trying to, or the things that I've been involved in over the last probably 5 years, is how early, what's the earliest part that we can go into to mitigate that. So insurance becomes, yes, we're going to respond to the claim, but also how do we help the individual consumer or the business become a claim avoider in order for them to be more successful.
That's a really great framing for it. Be a claim avoider. Amrish, I was going to kick the same question to you, but we got actually two separate questions from the same person, from Jamie Rogers, that are specific to Metromile. So let me throw these out. It's sort of on the same topic, but given your connection to the data and the driving habits, the question here was, are you using telematics data in claims adjudication? And then Jamie specifically asked if you're using the telematics from the car to trigger FNOL. So, the car knows if the airbag's been deployed, for example. Are you using that to start the claim process? So maybe you can speak to the telematics role in claims adjudication from FNOL on.
Yeah. So those are two separate use cases. We are using telematics data in claims adjudication. We're open and transparent with our consumers in sharing that information, and often where that has helped us tremendously is in helping our consumers when there's an accident, in order to create the right facts of loss. In the area of automatic crash detection or knowing that an FNOL should start as soon as an accident happens, that's an active area of exploration for us. We have to make sure that we are responsible in making the data science models that are accurate in predicting that. And we're in the point where we're investing in researching in that. But we're a few, maybe months to a year out in deploying that in production. But it's an area of active investment for us.
Okay. There's a question that came in that hits close to home for me. So I was an early adopter of using chatbot solutions, although that very much was downplayed in the solution. I was one of the first users of Hi Marley, where I actually worked for a bit. So this question is about chatbots and AI specifically. How does the panel see the inclusion of conversational AI or intelligent chatbots while processing claims?
So I'll give you my 2 cents. I think it depends on what you define as what is your service proposition or what's your value proposition. So if you're a service touch person, and that's how you control costs and how you manage the loss costs, then it's probably it disincentivizes, if that's the right word. It removes the value to the consumer experience. If your user or your consumer wants that process, wants to be led through a process that and doesn't need the human element of that, then it probably incents the value or incents the determination. I think the reality is we're not quite where my kids didn't grow up fully using technology, but they are 100% technology driven. The concept of going into a bank is completely foreign to them, but I still have a bank account and I still go to the bank occasionally, so I want to be able to have options. And I think that's where we're in the phase that we're at today. And so I think right now it's a matter of balancing the options before, again, technology becomes the leader to design versus the enabler of design.
Yeah, I really like that point that Eric just made. I think it's more about understanding what mode of communication or interaction the customer wants, and certain customers may want to, talk on the phone, and therefore we should invest in technology that helps them be really efficient in a phone conversation with the claim handler. In other cases, they want a digital interaction, whether it's through a chatbot or some sort of guided UI or some other means. I think it's more about servicing the customer in the exact medium that they want to use. And so I think chatbots is one of those mediums, but it's one of the other many mediums that are already available.
Thank you. We have a question from someone that I'm guessing is not at a carrier, but actually on the vendor or the partner side. And it's around how do vendors or partners in the claim space make the case for the need for innovation and the value that they bring. So it's sort of to the theme of the webinar, but specific for some of those solution providers. And Amrish, if we can start with you, given that Metromile sits on both sides of that equation, is that something you faced as you try to make the case for the value of your enterprise solution? What are the key things that help a carrier see we need to do this now, and this is why it's valuable to us?
Yes, I think it's front and center. I think it's about making the business case and demonstrating the exact metrics that will get impacted. Insurance carriers make investments based on business benefits, as they rightfully should. And so the best thing vendors can do is draw a direct line between investment in their technology and an actual metric that will move on the carrier side, which will demonstrate ROI. And the vendors that are successful are the ones that are able to draw a very clear line. The ones that aren't successful are the ones that aren't able to convince the carrier that there will be an ROI associated with the technology investment.
That's really helpful. Eric, do you have anything to add on that, or would you just agree?
Yeah, I 100% agree. But the only component I would add is if you're a vendor and you're out there trying to compete in a space that everybody else is competing, drawing a line to the ROI is absolutely critical. But find something that makes you unique and special, that justifies why that line's important to get to the ROI. Because if you create something, somebody's gonna, there's not a lot of uniqueness. Find what is differentiating in your space and leverage that, because then the ROI is a value add rather than just a dollar play.
Yeah, that's great. having been on both sides of the equation myself, I would strongly agree with the points that each of you made. I think that's a great way to sum it up, Eric. So we have time for, I think, one more question. We've gotten some really good ones in here. Maybe a bit of future telling in this, but the question is around, from your experience, what's the percentage difference between claims that are able to just fly through the automation versus needing the manual touches? And what I would add is the future vision. Eric, going back to your 10 to 12 year point, regardless of how long it is, do you think there's ever a world where no claims ever need people, or we will always have the spectrum where, to different degrees we can automate, but there are always going to be claims that need the human adjusting? And maybe this isn't something we can truly answer because we don't know what tools will be out, but I'd love to just sort of get your takes on this as a bit of kind of thinking about what's to come and the way the industry may be headed.
Yeah, to me, even in my career lifetime, which isn't that much longer, I fully expect that we'll start seeing erosion into claims not needing human touch. And it sounds like Amrish is already in that space, but when you think about in the comp world, the percentage of claims that can be validated with bits of information for payment and processing, that feels like a space that can become highly automated, and then you're only dealing with claims that have significant tail to them. I think on the auto physical damage space, we are on the horizon, just outside of the horizon of stepping into it, of allowing auto physical damage claims to be paid in a pass-through moment. So I think we'll see that. I think we'll see more and more of that in certain lines of business sooner rather than later, and that percentage will grow over the years.
Yeah, I think the certain lines of business point is the interesting one. Is it's volume-wise, we often talk about auto and home and comp or commercial property. I remember I spoke at the first Connected Claims conference, and obviously another one coming up this summer. And I had a picture of a drone with a robot head attached to it, and jokingly it was like, we do a lot of liability work at Hiscox. So I was saying, we're going to have AI-powered drones start negotiating in all of our mediations, and obviously that's not happening. But I also kind of kicked myself that you never know. Maybe it's 40 years from now, or 100 years from now, or 10. But we don't necessarily know, and there's a lot of different lines of coverage out there with different complexities. But I think the lines that you guys are talking about are front and center for this very question. So on that, Amrish, I'd love to get your thoughts on it.
Yeah, I would say that the technology is there today, but I think what's going to be really important is the acceptance that humans on both sides will have in how the technology is utilized. I think right now the customers should dictate and do dictate, which interactions can be automated. And I think as acceptance increases in general of automated interactions, the adoption will increase as well. But I think that's a fine line that every claims organization in every lines of business they're in and every sort of context-specific environment they're in has to make that decision. I think it's going to be a lot less about technology, a lot more about human acceptance.
Human acceptance, that is, I think that's exactly the phrase to use. Sure, there's still room for technology to evolve, but you're absolutely right. It's the comfort that we have. And claims is such an interesting space because, this is where people get the value for the product, and it happens to come at possibly the worst moment in their life. So their threshold for acceptance may be different from their normal day-to-day. They may take automation from Netflix telling them what to watch versus, when they're in a hospital bed, are they going to take automation from their carrier telling them what their treatment's going to look like? And maybe today the answer is no. Maybe at some point, at some tomorrow, the answer is quite different. Thank you both very much, Eric and Amrish. Really great input, fantastic questions from the panel. And this is the kind of debate and the kind of discussion, the kinds of topics that as an industry, we really owe it to ourselves to get into. And, I mentioned it before, the Connected Claims Conference, this is what goes on there. And, as an industry, I do feel like, and of course I'm biased, but I think we all are on this call, claims often doesn't get the kind of focus that some of the other departments might from an investment standpoint. And Eric gave us a bit of hope that you're starting to see that specific investment for claims to innovate. If you haven't gone to the Connected Claims Conference, I do strongly suggest it. I was lucky to be there at the first one. I was there this past year, so I've seen this huge shift in it. But it is the most focused and valuable thing that I get to do from a claims perspective annually. And these are the kinds of conversations that go on there, the kinds of panels and discussions and presentations. So if this was even remotely valuable, you should seriously think about coming to Chicago this summer for Connected Claims 2020, which is pretty cool to be able to see that it's still going on, and it's dramatically larger than that first one that I spoke at. But that's June 24th and 25th in Chicago, which is a great time of year to be in Chicago, by the way. So again, thank you to the panel, to both Eric and Amrish for taking the time, and to all of you. We had well over 100 people tuned in, and I know there's plenty more who registered that will be watching this after the fact. And thank you to Insurance Nexus, Reuters Events for putting this on. Really valuable, everybody. Thank you so much for your time today.